give me your rationale. Why is the dollar going to go down? Do you know that in the 2008 crash, when everything fell apart, you know what one currency in the world in the developed countries went up? Do you know?
in 2008?
The dollar, because it's not a great currency. It's the best house in a bad
Right.
neighborhood.
Yeah, sure.
Europe has printed way more money than us. Japan, way, way more money than them. Our demographics, even though slowing over time, are stronger than either of them, and Japan's the weakness. And China is the worst over-investor, waster of money in the entire world today. We're the best house in a bad neighborhood. If I had to own one currency, it'd be the US dollar and maybe some New Zealand and Sweden and Australia. Would not be Europe or Japan or China. Where are you going to go if you don't want to be in the US dollar?
So it's hard for me to understand your investment thesis. So I'll try and clarify it so I get it better.
Because the currencies do not have a value. They trade relative to each other. I just gave you my thesis. We're the best house in a bad neighborhood.
Right. But so
everybody's in trouble. Everybody's over in debt. Everybody's overstimulated, which always ends up in a crash. We're the best house out of those.
Do you think interest rates should be higher?
Go down. Our stocks are going to go down, and our real estate.
Do you think they should quit printing as much money as they are?
Yeah, as soon as they do, bam, this thing will be over. You know what they did? That they just did a little, and we had the repo crisis overnight. Not enough money for banks. Oh yeah, we're fine. We're over this crisis. No, as soon as they stopped the monetary hose to keep this bubble going, it caves. They know they can't, Richard. That's why they won't. They tried it in 2017, 18, and they got their ass kicked.
Well, I mean,
and then COVID came. So
in theory,
if they should stop, it's just going to cut off the bubble sooner and make it less. But they're not going to stop. They cannot stop. They're going to have to go till this blows. I think it's blowing potentially right now.
So let me see if I get your playbook right. You think that at some point they can't lower interest rates anymore, and then they can't increase M2 anymore, and then they can't push all the asset prices higher, so then it tastes blood in the water. Then the markets crash.
Right.
Because the markets are crashing, what that means is that people are selling stock for dollars, and then dollars become rare, and then the dollar goes up in value, similar to how it did in the 2008 and 2009 crash. And when the dollar becomes stronger, it actually pushes the value of anything denominated in the dollar down, such as gold or crypto or anything else. So am I getting your playbook?
And it hurts our exports overseas, which are already going to be.
But it makes our imports cheaper.
Yeah.
So that's the playbook. That's like kind of what you think is going to happen, basically.
Yeah, okay. Part of it. It's just that.
So the way that you think is a good way to profit on that situation is by buying 30-year T-bills.
Treasury bonds. T-bills are 30-day to 90-day. They're short, 6 months.
Mm-hmm.
They're like cash. They're not going to vary hardly at all. 30-year Treasury bonds are the safest and the longest term bonds you can buy. In a downturn, money will go to safety, safe haven, which is not gold, because gold did not prove to be the safe haven last time. Already flagging ahead of this crisis this time, more than it should even, with all this money printing. So it's the longest term bond in the safest large currency. That's why I want it. And when rates go down because of deflation, which they will, there won't be any more inflation. There'll only be deflation or zero inflation. Then that bond will be worth more, locking in 2% today over 30 years, when the best you can get a year or two from now is 0.4% is my guess.
Yeah, so to me, like it's odd to me that you think it's very odd that as someone that thinks everything is going to crash, that their way to profit is by buying an instrument that pays them dollars. Could work. I guess it could work. I would go check the charts.
You did miss the part that I said we're the best house in a bad neighborhood, and I'd rather have a dollar than a euro or a yen or a yuan. Did you miss that part?
Yeah, look,
That's why I said it. I know you don't understand. That's fine. I'm saying the dollar, if you have to pick a major currency, and call me wrong 2 years from now. I don't mind being called wrong. I have been before. I'm saying the dollar is the best place to be. And the longest term safest of those bonds in a crisis is the best place to be. Everything else, all types of risk bonds, all real estate, especially high end and highly urban, all stocks will go down. Every other financial asset will go down except these high stocks. A AAA corporate bond would also be a good place to be. That's it in my scenario.
Yeah.
Just
So
for a couple of years.
I would, so if we're using a fractal of the 2008 dump, then if your 30-year treasury bonds profited in that scenario, I'd be willing to guess they would do the same again. Yeah. Personally, I would try and look for something that went up so if it's a seesaw and the markets are going down and the dollar's going up, personally, I would try and find something else that would go up that wasn't the dollar, because I don't like something that people can print out of thin air.
Well, that's easy. If you don't like the dollar or currency, then you buy a global stock portfolio. You short a global stock portfolio or a global index.
So I tried to explain that
Stocks
shorting
will go down, whether we have an inflationary outcome, is the gold bugs predict, or a deflationary, as I predict, more like the 30s. Either way, stocks will go down. Stocks don't like any crisis, any downturn in the economy. They don't like high inflation. They hate deflation. So the best place to make money in a downturn, it's just more risky than holding a 30-year treasury bond to me for everyday people, would be to simply be short stocks.
See, it
unleveraged,
feels,
just short.
Betting
on stocks going down.
You can, to the listeners, let me tell you how dangerous shorting is. Bitcoin went up 5 million X. A lot of people shorted it. They all lost everything because your downside is infinite. So if you had bought Bitcoin at $1 and sold it at 50,000, you made 50,000 bucks. But if you had shorted Bitcoin at 50,000, it wrote it down to $1, which it never went to, you'd only have made...
Richard, that's crazy. Just stop that logic. That means if you held it forever. I'm not saying hold any of this forever. I wouldn't even hold it a couple months if something changes in the wrong way.
You're looking at
short for a period of time. Stocks have gone up so much. The more any asset goes up, the less it can go up just because it's bigger. Anything bigger grows slower than in the early stages. So that
the parabolas disprove that.
You could go to zero. That would take forever in stocks today, and I wouldn't be in stocks. The longest I'd be short might be a year or two.
I'm saying that if you look at the price chart, the history of all shorts is that they lose all of their money in almost every price chart because they print the money for free. As long as these price charts we're looking at are denominated in dollars and they're printing the dollars for free.
So
even
what do you, okay, you give me, Richard,
sure,
your recommendation. Let's say I'm right, we're going to have some sort of big downturn.
Yes.
Just that one assumption, it could be inflation. What is the one thing you would have people buy to make money in a downturn?
Stablecoins. You buy stablecoins. So right now, well, yeah, because they're tied to the dollar. But so
wait, you hate the dollar.
Yeah, but they have.
Richard, what are you talking about here? You hate the dollar. You don't want anything in dollars or paying in dollars.
Yes, but it has advantages that the dollar doesn't have. So when you take $1 to your bank account, you have probably some taxable income problems, don't you? There, yeah. So depending on what jurisdiction you live in, it could be the case that if you sold an asset for dollars, maybe you live in a jurisdiction where that's not a taxable event. And then maybe you can just stick that in decentralized finance, which is currently paying, depending on what you're trading, 40% APR because people are borrowing it for leverage to get long. So in DeFi and Ethereum, you can take a stable coin and lend it out with just smart contract risk, no other counterparty risk. There's no AML, no KYC, no sign up risk, no global overlord that can be like, that's not your money, we're taking your money, none of that bullshit. That's all solved. So you just do have smart contract risk. You got to make sure, you got to hope the code works right. And you can get in between 6 and 40% per year sitting on your fucking cash with, depending on where you live, maybe no taxes. Sitting in cash. How long have
stable coins been around?
4 years maybe. They actually trade more volume than Bitcoin does.
When Bitcoin crashed in 2018?
Yeah, they were there. Yeah.
How did my first test, and because you could be right about this one, sounds more reasonable to me. Yeah. How did they do in that crash? Did hold their value go up or go down?
They're basically always about $1. They usually hold their pegs very well.
Okay, so that's a way of not growing your money. You're not going to make money on that.
Well,
Thing.
I mean, look,
Preserving your
6 to
money if
40% a
you
year is
don't
good
think the
APR.
dollar is going to preserve your money, which I'll give you is at least a possibility.
Yeah.
Okay.
No, the reason
So
I tell you
that makes sense, but
yeah.
you're not going to make. How are you going to make money for?
Well, you make
people
6 to 40% per year APR, just because what happens is you're putting your stable coins into the lending platform, and then people are borrowing those to sell them for crypto to get long crypto, and then they get wrecked and liquidated, and then they have to give them back, and then you get your coins back with interest. And so traders being ruined is what allows people that lend out stable coins to be profitable. So, if you tried to lend out Bitcoin or Ethereum, you get no interest. You get 0.15% instead of 6%, because it's harder to get a hold of these stable coins. And right now, more people want to get long because it's a parabola, and people love to buy tops. They absolutely love it. They hate buying bottoms. They love buying tops. So, if you believe that the markets are going to crash, I think getting into stable coins like DAI, which has no counterparty risk, just smart contract risk, or USDC, which does have counterparty risk. They can seize your coins when they want, but they've only done it once or twice upon the government commanding them to for some legal thing. And they've got more trading volume than Bitcoin has. Tether does more trading volume a day than Bitcoin or any other cryptocurrency. That's how popular they are. So stablecoins are actually the most popular cryptocurrencies, even though they're
real quickly,
not real.
You say, okay, so you get interest.